scan this. Sovi is here. Let's level up. Accounting profit questions can be tricky, but we can solve this fast. Let's break down exactly what happens when a firm's accounting profit stays positive. First, we must define accounting profit as total revenue minus explicit costs. These are the actual out-of-pocket payments a business makes, like wages and rent, to keep the whole operation running. Since the problem states that accounting profit is greater than zero, total revenue must be larger than those explicit costs. This simple mathematical relationship is the core definition of being profitable. Economic profit includes implicit costs like opportunity costs. Since only accounting profit is positive, only option C must be true for this firm. Well done! Scan the code. You can learn better with Sovi. Avoid the rush and trust the given definitions to find the right answer.